Be Wealthy and Smart, episode 1309.
Step into a world of wealth and financial freedom without budgets, boredom, or bosses on Be Wealthy and Smart. And now, here's your host, Linda P. Jones.
Welcome to Be Wealthy and Smart. I'm Linda P. Jones, America's Wealth Mentor, empowering women and men worldwide to financial freedom. On today's show, we're going to talk about, is the economy too strong for the Fed to cut interest rates? Because that's the narrative that's playing out right now, is that, oh, well, we wanted to cut rates. We thought we were going to cut them in March. The market really predicted an 80% chance of a Fed rate cut in March prior to seeing the stronger numbers this year. But now, with the Fed being data-driven and the data coming in so strong, showing that we're not having a recession, showing that jobs are very strong, showing that inflation is trending down, now the Fed is jumping to the side of, well, we don't want to reduce interest rates too much and get the economy in an upward spiral. So their vacillation is causing interest rates to vacillate, and it's causing markets to not be sure when is the Fed going to start cutting rates. Initially, they thought it was March. Now the futures markets have been more certain that it would be around the June time horizon. But interest rates have been backing up a little bit because they're not quite sure when the Fed is going to cut rates. Now, rates are definitely down from the peak, and mortgages peaked over 8%, and now 30-year mortgages are more in the 7 to 7.5% range. So we have come down a little, but the Fed is now vacillating on what they're going to do, and that's confusing markets, and markets don't like uncertainty. So what caused more uncertainty? Well, the labor market is so strong and wage gains have been high that it's really surprised the Fed. Non-farm payrolls increased 353,000 in January. Unemployment remained unchanged at 3.7%, and average hourly earnings rose 0.6%, up 4.5% year over year. So unemployment's been under 4% for 2 consecutive years, which is the longest stretch in more than 50 years. That we've had back-to-back years of unemployment under 4%. And more jobs were created in 2023 than were previously estimated. So the futures markets are now saying, we don't know about a May rate cut. Might happen in June. According to Chris Lowe, chief economist at FHN Financial in New York, said given the Fed now wants strong job growth, as Fed Chair Jerome Powell told us just 2 days ago, this report should not discourage the Fed from cutting rates. By the same token, however, it is not going to encourage them to rush into rate cutting. Yeah, that pretty much sums it up. So as of now, the futures are saying there's a 20% chance of the Fed cutting interest rates in March, down from 64% a month ago. It looks more likely that it's going to be May or June, and the probability of May rate cuts has increased to 55% from 37% a month ago. And futures markets are now predicting 5 interest rate cuts versus 6, which were predicted in January. Now, we also have a situation where the Fed is going to offer U.S. government bonds this year to the tune of about $2 trillion. And if yields aren't seen as attractive on those bonds and there's any problem selling those bonds, rates will rise in order to attract buyers. So while this is all frustrating and we just have to not get caught up in the minutia, the message here is that strong economic data may change the Fed's timing, but it doesn't change the Fed's direction. It just means that they may be doing it at a little bit slower pace. The reality is we're still in an election year. Historically, the Fed has been easing into the election, and the second half of this year will probably see the greatest decline in interest rates. Nonetheless, markets look ahead and they do anticipate what's going to happen 6 months in advance. So it's not unusual for interest rates to start to decline before the Fed cuts interest rates. The good news is the economy is sound and strong. Interest rates are coming down in a decreasing direction, which is going to help the real estate market and business, and ultimately the jobs market and the consumer. The consumer being 70% of the total economy and the most important piece to this whole puzzle. As long as the consumer remains strong and spending is good, the economic outlook is very positive. That doesn't mean we won't have ups and downs in the market. While we are seeing all-time highs in the S&P 500, as I've explained, this is mostly in the largest companies within the S&P because they are taking advantage of artificial intelligence. And that is giving them a huge benefit over all the other companies in the S&P 500 because the largest can afford to make the investment in the research and development for artificial intelligence. So it's more important than ever that you own the mega cap stocks, that you have positions in artificial intelligence. This is only going to become more important over the next several years. We're just starting to see the very beginning of this and how much of a premium companies are given because they're investing in AI and how much that's going to help their ultimate bottom line profitability, which is going to separate them from the rest of the pack. Ultimately, what drives the stock market higher is profitability, and companies becoming more profitable because they are adopting AI strategies is going to benefit many, many companies, but especially the largest. If you haven't yet subscribed to Be Wealthy and Smart, hit the subscribe button and you'll be notified as soon as new podcasts are available. And all of my podcasts are on my website at lindapjones.com/podcasts. And while you're there, sign up for my weekly newsletter for more wealth tips. Oh, and in case you're wondering if there's any value in my newsletter, here's what a recent email subscriber said. Thank you for your newsletters. Because of one, I now own, and I'm not going to say which cryptocurrency, but a specific cryptocurrency recommendation I made. Because of last week's, I'm now the proud owner of, and these are private equity shares that I mentioned. She says, my next move is to put the money together to be part of the Be Wealthy and Smart VIP experience. If following your advice in a newsletter can make me feel this good, I'm going to be ecstatic fully on board. Thank you for that. There is true value in my newsletters. If you haven't signed up, go on over to my website at lindapjones.com and subscribe. That's all for today. Until next time, live the good life and be wealthy and smart.
Thank you for listening to Be Wealthy and Smart with Linda P. Jones. Share the wealth and tell your family and friends about the show. Check out our website, blog, and social media for more riches at www.bewealthyandsmart.com.